we had a strong, stable and sustainable year with both NPAT and headline earnings per share up by 4%, and revenue was up by 5%, and diversified revenue is a very important strategic highlight for us. Stabilization and quality of earnings through the cycle is evident in the results. Our non-trading revenue, for example, is up 13% and now contributes to 25% of our revenue. Our new acquisition, which was Link Market Services, now JSE Investor Services, has reported a compound annual growth rate of 49% since we acquired it in 2020. These results show us that the diversification fortifies us through the cycle. So we've got stabilization and quality of earnings through the cycle. Another important feature which underpins and supports our results is the resilience of our markets, i.e. the uptime. We are at a high point. Our number of hours that we are available to the market is at the highest point yet, higher than our 15-year average stats. And then finally, importantly, is that we are building a center of innovation. We've got some exciting new innovations. We've introduced a number of initiatives for small and medium enterprises. Our private markets allows small companies to raise funds in a much easier and less complicated way than in our usual listings environment. We've also developed artificial intelligence tools like a social listening tool, which uses social media as an early indicator of potential issues in the market. And we've taken all of our equity market data to the cloud. And so what we are all about at the moment is making sure that we're responsive to the market needs, and it's about the clever use of technology that suits the market.
So let's talk about that. I mean, it's quite interesting because you look at this macro environment that we're in, there's a lot of economic uncertainty. What are you seeing when it comes to the demand to want to raise capital, especially from on the private market side, the SME initiatives, as well as, I suppose, even from an IPO perspective?
Well, certainly from a private markets perspective, we've seen tremendous growth since we launched our new private market in March of last year. 12 companies have come to market seeking to raise finance, and we have 12.5 billion South African rands in investor capital committed. Many of those companies are in the renewable space. Some of them are raising funds for hospitals, for schools. And so these are really grassroots developments, and they are contributing to the growth in unemployment, and they're also contributing to capital raising in the market. It's a new form of capital. We have seen the overall market capitalization of the exchange growing by in excess of 4% over the last year, and that continues to grow. And we are seeing a lot more investor appetite from the international market. And all of these factors contribute to companies wanting to raise capital.
You had initiatives in the East in order to attract investors. Are you seeing the impact of those initiatives, those explorations, for lack of a better description?
Natasha, a lot of these initiatives are long-run initiatives. They're not initiatives that we expect to see an immediate turnaround. There are three areas of focus. We're focused on getting our data to potential investors. We're focused on trying to make it easy for companies in Southeast Asia and other parts of the world to list on our exchange. And we're also trying to encourage traders to come in and trade on our market. We have seen movement in number of new traders globally coming into our market. You may have seen that we also signed an MOU with the New York Stock Exchange, and we're hoping that that will also encourage a sort of dual flow. So while Southeast Asia is an important focus, it's not the only focus. Of course, ultimately, it's about exposure of the man on the street to investments on the exchange. And because we're an institutional exchange, most of our investors are pension fund holders, and those pension fund holders are able to also invest in stocks that are dual listed, some of which have their roots in Southeast Asia. So it's a multifaceted approach, and it's something that we are building over the long term. It's not something that we expect to see an immediate turnaround in a very short period of time.
The one thing that has been, I suppose, the common theme when I look at some of the earnings that have come through has been what a lot of the corporate execs are saying in terms of the macro environment, load shedding being an issue, the lack of growth that we're seeing. From your perspective, what are some of the things that we should be focusing on? What are we missing here in this conversation? Because I suppose load shedding is the immediate thing that we need to deal with.
Natasha, much of what we are focusing facing into in the headwinds are really global themes. National energy security is equally a problem in Europe as it is in South Africa. Low growth is a problem in the US, in the UK, and in Europe. And inflation, i.e. the cost of living for the man on the street, is going up everywhere. What I think is really critical for the South African market is that we institute turnaround plans and we execute on our policy as quickly as possible, and particularly relating to electricity.
So let's talk 2023 guidance. I mean, let's look at it, I suppose, from a growth perspective, CapEx, as well as even from a dividend perspective. Are there any external factors that could affect that guidance, or how are you looking at it?
We are certainly very much affected by what's going on in the global macroeconomic environment. There are three factors that will determine the level of headwinds that we're facing into. Firstly, China's opening up of the economy, and whether they do in fact grow or not will affect our trade relationship and economic activity in South Africa. Secondly, the Russia-Ukraine war, how quickly that, whether that escalates and how quickly that's resolved. And then thirdly, the inflation situation, and particularly the US, and whether they have a soft landing. Do they go into recession, or are they able to narrowly avoid a recession? And all of these factors influence the investors' appetite to invest into emerging markets like South Africa. What we've been very pleased about is to see that the international investors are more favorable towards South Africa relative to other emerging market countries than they used to be. For example, the inbound investment into the equity market is much more favorable last year than it was the year before. So it's we still have outflows, but it's about half as bad as it was a year ago.